Central tenet of Donald Trump's trade policy that deficits are bad, and the wars he fought with partners around the world were partly aimed at reducing all of that. And yet the latest numbers out of the United States show this hasn't worked out so well for the US president. The US total trade deficit hit a 10-year high in 2018, and the deficit in goods with China is also at a record high. Now, tariffs that Trump put on different partners around the world were intended to reduce these deficits, and yet consumer spending here in the United States has helped ramp up those deficits, and Trump has to be to blame for that. He imposed tax cuts that helped drive up consumer spending. So this is a US president that wants his cake but can't eat it. Those tax cuts that were given to Americans incentivized them to go out and buy goods from countries like China, and those imports helped drive up that deficit. And deficits do eat into economic growth because we subtract imports when we calculate gross domestic product. And that GDP was lower in the last quarter for the United States, suggesting those deficits were starting to cause problems for the US economy. So how important is all of this for the China-US trade deal that's supposed to end the trade war between these two countries? Well, those numbers had already been forecast. They've been delayed by the shutdown of the government here in the United States. And we know that trade talks have been happening between these two sides. They're due to be finalized when Trump hosts President Xi Jinping of China at his Mar-a-Lago home at the end of this month. Now, China has been buying more things from the United States, products including soybeans, for example, that should help reduce that deficit. Ironically, China's argument in all of this might help because China asks, do the numbers really matter here? If we take the example of the iPhone, well, most of it is made in China, and you could argue that most of the value is created there. But iPhones are recorded as an import when they're brought back into the United States and drive up those deficits. And it's often overlooked that the US runs a very healthy trade surplus with China in services, something the US president doesn't talk about very often. So the lesson might be here: is it time to think about how we calculate GDP and deficits? Owen Fairclough, CGTN, Washington.